Hello and welcome. Today, I want to share something really exciting, an automated group consolidated reporting template that was built using Google Sheets. If you're currently preparing your reports using Excel, this might be just something that you've been looking for. It's neater, it's tidier, it's smarter, way more advanced, and very structured, and of course, automated. Now, we know that some of the reporting solutions we have out there are either complex or expensive. We built this particular solution on Google Sheets with all that in mind. My name is Temidolua, or Temi for short, and I like to refer to myself as a tech-savvy finance business partner. Some of my colleagues and friends call me Tech Bro, but professionally, I'm an accountant and currently a senior finance manager. Now, let us walk through the solution together. What I have here is an entire folder, or what I like to call the group consolidation pack, which has 4 management reporting files and 1 group consolidated reporting file. So we do have a written set of instructions here, which help you with the setup and general operation of the file. This is more like an entire system of reporting. You can have one of the entities serving as the parent. And for the purpose of this demo, I would like to have entity 1 as the parent. Now, I'll be bringing in the trial balances for each entity. That's entity 1 to entity 4. I'll bring in 3 months trial balance. So a total of 12 trial balances just for this demo. And it's important to note that the idea behind this template is such that each finance manager or reporting officer updates their assigned template, and then the data just flows into the group template, where the group reporting officer or manager then performs other consolidation steps like passing consolidation journals, elimination journals, and so on. All right, then let's start checking each of these folders one after the other. Let's open each of the entities. So I'll be opening entity 1. Let's go back. Entity 2, entity 3, and entity 4. All right. Now we will be bringing in each of the trial balances one after the other for each of these entities. So I'm starting with entity 1. We have them in Excel. Typically, most softwares, whenever you're pulling your trial balance, it comes out in a spreadsheet format, which people typically access using Excel. I'll be bringing in each of these trial balances. You can see here I have entity 1's currency as dollar, entity 2 as naira, entity 3 as pounds, and entity 4 as euros. Let's go with entity 1. The way I'm going to be doing it, I'm just going to copy this trial balance the way it's. Before we bring in the trial balances, I would like to just run through this template to show you how it works generally. What I'm going to say here for entity 1 actually applies to all the entities. Each entity has a financial sheet which contains the profit or loss, the balance sheet, and the statement of cash flow. And we have the financials breakdown, which is like a lead sheet, which is linked from your trial balance. We have the SOC, and then we have the trial balance and the local currency. Apart from this, we also have another set of sheet tabs, which are financials in the presentation currency of the group. For this demonstration, the presentation currency of the group is actually dollars. This constant currency represents the currency of that particular entity in dollars. Same thing applies here for the breakdown, which is like a lead sheet, but in dollars. This is the trial balance in dollars. We have the trial balance in the local currency and the trial balance in the group presentation currency, right? So I'll be explaining further as we go on. And then we have the SOC also in the group presentation currency. Now, apart from these, we have sheet tabs that you're expected to impute your trial balance for each month. So it's like a month-on-month approach. So you're supposed to just include your trial balances for each month. So you're supposed to bring in your monthly trial balances as they are spooled from your accounting software. January, February, all the way to, so I've decided to run this all the way to December 2025. So this gives about 2 years of data. So then we have this chart of accounts sheet. So this is just a guide on the accounts GLs that are obtainable or that can be included or created for each entity. So I'm saying this because this chart of accounts sheets is actually spooling all the way from the group reporting template, right? What that means is that if I make changes in the group reporting template in terms of the chart of accounts, it's going to automatically reflect here. And this is also appearing in other entity files. Entity 2, 3, and 4 all have this sheet, meaning that if the reporting manager of entity 2 or entity, let's say entity 2 wants to create a new GL, right? He is expected, or the first thing he should do is to come to this sheet to check and be sure that that GL doesn't already exist for a particular line item in another entity. So this is important, especially when you're trying to create GL for lines such as banks. So imagine you have a particular GL representing, let's say GT Bank in entity 1, and then in entity 2, the reporting manager doesn't know that that GL has already been taken, and then he puts in that same GL for a Zenith Bank in his entity. At the end of the day, there's going to be a mismatch, especially when it comes when you're looking at it from a lead sheet perspective, right? That's the importance of this chart of accounts sheet. Okay, so now let's just go right into bringing in the trial balances for each entity. So I'm starting with this entity 1, which is assumed to be the parent entity. Okay, let's bring this in. So this is January. Currently, I'm in the January sheet. This is a January sheet. So 2 ways: you can either, impute the figures one after the other, or just paste them, as long as you don't mess up the referencing. That is the way this particular sheet links to the TB, then you're good. But my own preference is for me to just put XLOOKUP formulas linking whatever I'm going to paste from column I to this table. So I've already put the formulas here. So pasting the GL description, debits and credits in column I to L just automatically populates here. Okay. All right. I'm going to do the same for February. So February, I'm just taking the description. So let me go to February. So column IJ, then I'm going to take column E and F here. So those are debits and credits. Remember, these are just demo TBs. So please don't crucify me if you see something really strange in terms of the figures or how they are appearing. Okay. Now let's go for March. This is March. Let's check this February again. Okay, good. Then March. See, you can see that the moment I pasted the figures, they all appeared here. That's because there's an active XLOOKUP in the formula here. You can see this is balanced. Now that I've pasted these monthly trial balances, if I go to the trial balance sheet here, you see that I have everything appearing here. I have everything appearing here. This particular sheet is what links to the lead sheet. You can see it's all balanced. It's all balanced, right? If I go to the financials breakdown, you see that I have figures for January, February, and March, right? And then if I click on financials, you'd see that I also have them populating here, all linked all the way to cash flow. If you have any GL you want to include here, or you are creating for the first time, apart from searching for the GL in this sheet, you then have to just input the GL in the TB sheet and financials breakdown sheet, and then everything should still add up. But mind you, when you're including these GLs in the financials breakdown sheet, always include those GL in the line before the total. You just select this row 94, for example, and then insert the row and then include the GLs that you want to put. That's it. But I'm not doing that now, so let's move on. Now, recall that the entities have their TBs in their local currencies, and entity 1 is denominated in dollars. Entity 1 is a parent, and we are trying to present the group consolidated file also in dollars. Now, if you come to this TB console currency, you see here that I have the average rate as 1 and closing rate as 1. What this means is that At this column, we have the same figures appearing here and here just because it's dollar to dollar, so it's 1-to-1. There's no rate or there's no form of rate that will apply in this scenario. Now let's check the group consolidated file to see whether the figures are appearing there. Let's do this. All right, so you can see that we have figures for entity 1 in this under the entity 1 columns for January, February, and March. All the way. This is even the breakdown sheet. Let me show you the summary sheet, which has the cash flow statement. So everything already appears. And if we check the console currency, you see that you also have figures here. Let's see. Console currency. Exactly. It's a one. You remember the exchange rate is 1-to-1. The figures are not going to be different, right? And obviously in local currency sheets, you can't see anything like elimination, console journals, or group. You only see that in the console currency sheet tabs. That's because you cannot be adding up. Practically, it doesn't make sense to add up naira, dollar, pounds, and euros figure together. That's a complete mismatch. If you're going to add up figures together for purpose of the group, you have to convert the other entities' figures from their local currency to the group presentation currency, which in this case is dollars. Let's move on to other entities. Let's go to entity 2. Same thing we did in entity 1, we would do for entity 2. I'm starting with January 2024. So now entity 2 is assumed to be denominated in naira. So let's just do this. January. So the XLOOKUP formulas are also active here. So they are just going to automatically populate. So let's go to February. So find today in March. Something I wanted to do, but maybe I'll do that when I'm showing you entity 3. You can see everything is all in now. And of course, we have the figures appearing in the TB, in the breakdown, and in the financials, all the way to cash flow. And then you also have your SOC as well. Now, if we check the TB console currency, like we said, you see that these figures are actually still appearing the same. That's because we've not included the exchange rate. So let me change this to MGN. Remember, sheet 2 is MGN. All right, you can see that the figures are the same. The figures in the financials console currency are the same as figures in the normal financials. Now, what we are going to be doing differently is to include the exchange rates. And if we are going to be including exchange rates, we'll have to do that in the TB console currency sheet. Let me remove this freeze. Now, I'm going to be putting the average rates and closing rates for entity 2. That has been included here for January, February, and March. So these are also for demonstration purposes. Now I'm going to put the average rate. That's for January, putting the one for February now, and the one for March. You can see that the moment I put that, we already have a figure appearing in the foreign currency translation reserve GL. So we can see that the moment I put this, we already have a figure appearing in the foreign currency translation reserve GL. Let me put the closing rates. Then this one, right? So now this is updated. The average rates and closing rates have been included. So now, if we check the TB, if we check the console currency now, you can see that the figures have actually now changed. They've already changed. Figures have changed. We're good. Now we have the SOC in USD also showing. You can see that figures are appearing in the foreign currency translation reserve. Now, if we come to, if we come to the group consolidated templates, we also see that figures have already automatically appeared. The refresh is just so fast and it's so smart, right? Now, let's do entity 3, but this time around, we will do it side by side with the group consolidated file so that we'll see the way the figures just update automatically. especially with the scenario I gave where each finance manager has his own sheet and the group finance manager has his own consolidated sheet. Let's do entity 3. Same thing, I'm coming to January, February, March. Now, we're in January 2024. So let's see, entity 3 is denominated in pounds. So let's do this. So now just watch how the figures appear, or let me move to the local currency. So the figures will not automatically really appear. So let's just watch how the figures appear here. Okay. So I'm pasting in column I, January. You can see figures have already appeared instantly. Now, if I go to February, let me do February. I'm going to copy the GL. Let's do February. So got it. You can see figures are appearing already. Now let me scroll to March and copy and paste as well. So I'm in again. So March, pasting here. Then I'm copying the figures and pasting here. Let's see. You can see everything is appearing. Now, because this is in pounds, we have to put the exchange rate that will convert the pounds to dollars. We'll do that in the TB console currency. Take off this. Putting the rate actually changes things instantly. This is January. January is this exchange rate. So this is January's exchange rate. I'm going to copy that average rate and paste it here. So we'll see how quick the C3 column dates this. Let's see. Let me put the closing rates as well. Now we've brought in all the TBs for entity 4 as well, using the same principles together with the exchange rates. So we have entity 4 figures showing, and then if we also check the console currency tab, we'll see that the figures are also appearing there. This means that we are on the right track. Now, the next thing that comes to mind when it comes to group reporting is eliminations and consolidation journals and all that. But before we go there, there are 3 sheets I would like to share with you. So if you look here, now that all figures are appearing, so that this is recording, now that all figures are appearing properly, all right, let me just run you through all the other sheets that we have here. If we look at, so you can see here that we have an interim financials in local currency. Obviously, these figures cannot all be added up together to have a total column. No, it's just each entity's figures for Q1, Q2, Q3, Q4, and then you have half year and full year figures. So we only put figures for January, February, March, and that's why when you have figures appearing under Q1 and not Q2 or Q3 and not Q4, right? But we have figures appearing in half year, and of course 2024 full year. Those continue to populate and add up as you include data inside. Right, so you have your year-to-date financials. Also for currency, you have your consolidated SOE local currency, but you can see here that there is no column to add up all the figures together. That's because it won't make sense to add up different currencies. We can't add up Naira, USD, pounds, and euros at the same time and add them up together. Now, if we check the console currency, this is fine. Let's check the consolidated SOC. We have this group column. The local currency stops here, but this one just extends a bit. And we have the interim financials. This is for, you can see that we've made provision for 2024 and 2025. That's for 2 years so far. And then these figures are basically flowing all the way from what each entity's finance manager must have included in their own monthly trial balances. Everything flows. It's like a complete system where you just have one data entry point and everything just flows into where it's supposed to be. And then we have your year-to-date financials, console currency. This is all good as well. Then this is the group chart of accounts that links to each individual entity's group chart of individual entities chart of accounts. So if I do something like this, so I'm comparing this chart of accounts here the one on this is the individual entity sheet and this is the group sheet. So if I delete this, then this one should also delete as well because they are linked. Now, if I change this to 1, 200, let me put something all obvious. This will also update. You can see it's just a proper structured system. Now, let's move over to this sheet that talks about investment in subsidiaries. So I've already populated this. So the assumption here is to have the investment in each entity as 90%, 80%, and 70% respectively, with NCI of 10, 20, and 30% as well. And from this sheet, if you come to where we have your NCI computation, that's where the data from that sheet becomes handy. If I want to calculate the NCI for, let's say, January 2024, I'll put the date here, and then I have to just select the entity. If I say entity 2, it's just going to bring out this, and then I will just, take the profit for the period for January. The profit or loss for the periods of this for entity 2, 3, and 4. Let me see. Let's just do it one at. So I'm going to take this 3 and 4. The OCI is this, and this. I need to select this. So this is January. This is, so I'm just going to leave it as 28. Profits for this periods and this, and you have this, and you have your NCI of this. Keep switching to, you have this. Then let's go to March. Profit for the period for March. You have this. OCI, we have this, you have this, and then you have this. We're good. So we are good on this front. This is just basically a calculation that I've included here for you. Now, where this becomes relevant is where you are trying to pass your entries for your NCI attributable to POL or attributable to the OCI. And we are going to do that in a moment. Now, let's just pass our consolidation and elimination journals. I'm going to be using this breakdown sheet and this sheet for all this. Now, if we come to the balance sheet here, you can see that we have investments in entities, that's investment in subsidiaries, appearing on the group column. And in group accounting, these are not supposed to appear there. So you just have to eliminate this. Let's do January 2024. Investments in entity 2. I'm just going to duplicate this. So we're going to credit this. Right. So now I've credited it, but you won't see any changes because I have not indicated what kind of journal it is, whether it's elimination or consolidation. They both have the same effect, but they just appear under different columns. If I select elimination here, for example, we see that this will automatically appear here, and that becomes 0. Now, if I do the same for other entities, that's entity 3 and entity 4. So I'm just going to copy the description here. This is also 10,000. Now, if we check, you see that nothing has changed. Now, if I select elimination here and I select console here, see that the 2 with elimination are already appearing under a column, while consolidation is appearing under this column. Now, if I were to pass the corresponding entry for this, I'll just put it in the owner's capital. Remember, this is still a demo, so I'm just going to repeat this. So if I were to pass an NCI or anything like that, what I will have to do is to debit the share capital and then credit investment in subsidiaries and then the NCI. Or maybe we should just do that. Let's just do that now. The investment in subsidiary is since parent A has 90% and this is 10,000, I'm just going to put this as 9,000. So this is 8,000 and this is 7,000, right? And then the NCI, the non-controlling interests, I'm just going to duplicate these descriptions. Remember, we're going to do this. Just duplicate this, duplicate this. This is 1, 2. So you can see that as we were putting this, we had our balance check here to ensure that what we're actually posting is correct and it actually balances. You can see here that everything checks out. Everything is balanced based on the entries. Now, if we were to pass our NCI journals, right, what we would do, let's say for January, February, March, so 3 entities each. So that's about 12 NCIs that we want to pass here. Let's say 31st January 2024, right? So what we are trying to do is to pass entries that will help us attribute the NCI to POL and also to the OCI. Now, what we would do is just typically come to our sheets where we did our computation. We would say controlling interest POL. That's what I'm going to do first. January 2024. So the NCI attributable to POL for each entity was this. So I'm just going to paste that here. Apparently they're all negatives. So let's see, just to confirm, they're all negatives. If they were, so they're all losses, right? So if they were profits, I would have had to put them, I would have had to just credit this and debit retained earnings. Remember, these entries are not going to the books of the individual entities. They're just for the purpose of consolidation. Now I'm just going to, since they're all negatives, so I'm just going to put them here, right? So I'm going to just take off the minus sign. So now obviously the corresponding entries will be here. Now I'm going to call all of this console journals. I'm going to repeat this here, and then I'm going to do this entity 2, entity 3, entity 4. Then copy this, paste here, and then do this. Now, after doing this, you see that the figures here have already been updated based on the NCI that we computed and the entries that we passed. So now the figures have been updated for the NCI for POL. Now we are left with the entries for the OCI. The same thing. I'm just going to repeat what I have here. So we just put this up here so that in case you want to make changes to the formulas, it's just giving you a heads up that you may not necessarily want to do that. This is non-controlling interest OCI this time around. And then we are going to, where the corresponding entry will be to the respective OCI rather. I'm going to do this now. Let's see, OCI. So this is this. So I'm going to copy this and paste here. So I'm going to copy that and paste here, right? And then corresponding entry I'll paste here. So if we check here, now we have profit or loss attributable to both POL and then OCI. And then if we look at our summary, so remember we did just for January. It looks all good and everything checks out. Everything checks out. Everything is just good, organized, automated. Let's try just one more thing and then we'll wrap this up. Now let's assume we want to pass intercompany transactions. I'm going to do just for January. We'll pass between payables and receivables. Now let's do for January again. The intercompany payable. Let's say intercompany payable entity 4. So let's call this now. Assuming let's go to the intercompany. Let's go to intercompany payables. Assuming we want to eliminate this. Remember, there's a figure showing under entity 1, but that doesn't matter. What we are looking at is from the group perspective. I'm going to eliminate this 3,000 by debiting it. Now, if we check it, you can see it's 0. Now, if I'm going to eliminate, it's already, you can see that it's already thrown out. So I need to eliminate a corresponding intercompany. This is two with the same amount. So I'll just come here, 3,000, and then it should be fine now. That's it. Let me know what you think about this template. There's still more to this template. I wish I could go over and over and go on, but just to save time, this is where I'll be stopping for today. I would have loved to perform those functions for other months as well, February, March, at least for those other months, but this should give you a feel of what this template is all about and how it can help make your group reporting as a company smarter, tidy, neat, structured and automated like I mentioned earlier. You're welcome. Bye.